All right, what's up, guys? This is Eric here with Investor Central Club, STAX and STAX AI software. It is Sunday, August the 10th. We are going to go over some STAX AI, and we're going to discuss a little bit about this week's upcoming earnings. So, with that being said, let's jump into our back tests. All right, this month, or previous month, July, we had 21 prints. Of those 21 prints, we had 11 of them already reach over 15% in terms of returns. We do have a few that are kind of just mingling around right underneath that threshold at this point. But that's a 52% hit rate. On average, the returns are giving 38% returns. We do have a couple of these that are actually earnings plays. For example, this AMAT one, we can see had 114% return over the course of 6 days. It was an earnings play and popped up pretty heavily after their earnings. So you could see pretty solid returns there. PCG, very interesting one. They actually, after earnings, dropped quite a bit, but then recovered and came back. We saw quite a bit of unusualness on this. If you go look back on previous posts that we had, if you're in our Discord, you can see that a couple of us are still in this position as well. Palantir, as you guys know, Palantir has been doing pretty well. In this case, already seeing a 65% return. Celsius, same thing. Celsius saw a big pop right after earnings, up 15% in terms of the equity from their entry point, but that one's at a 95% return already. ILMN, this was actually an interesting one. We saw a little bit of discrepancy versus a different software that's used by a lot of other people. They said that it was a sell or it was a spread. In our case, we saw it as a purchase. ILMN actually ended up popping quite a bit, went from $4 up to $10.60 pretty quickly. 165% return on that one. NVIDIA, you can see it's been doing pretty well, but as of right now, those are still considered a wash, barely up a little bit. So I do expect these have until 2027, so there's actually quite some time there. Robinhood, HIMS, these ones, HIMS actually popped before the earnings. In this situation, HIMS, the earnings have actually dropped, but before it dropped, during their earnings, it actually already saw 90% returns before that even happened. And Robinhood, we can all see, has been doing pretty well. This one saw 36% returns on the position. They do have till 2026, but as a result, we also do see 16% return on just the equity. Now, obviously, we do have a few of these that are, they're struggling a little bit, but I will point out Circle does have their earnings coming up this week. Coinbase did drop after their earnings. This one might, I don't know if this will necessarily recover right away, but this does have until March of next year. So keep an eye out for those ones. I do believe Etsy also saw a little bit of a drop after their earnings, but this one isn't down nearly as bad as you might expect. Now, let's jump a little bit further into previous months and what we've seen. We've actually saw, if you take a look over here on this date of high, what I've done is if it's updated within the last month, remember I do this every single month. If it's updated in the last month, it will show up in a blue highlight here. So you can see from last month, all of these actually saw higher highs in the last 30 days or so. This one, ARKK, is up 352%. LEU is up 263%. Riot saw as high as 190%. You can see these ones have actually, sometimes they pop very quickly. Sometimes you'll see it take a little bit longer for it to hit. So average hit rate for the month before, so June, is 155%, which is pretty awesome. If you're able to get into any of these positions, I'm sure you saw some pretty heavy returns on those. All right, we go back into this May. May was actually a pretty solid month. The only misses here are Tesla, MicroStrategy, and Alibaba. But those ones, like I say, take a look at how much time they have. This MicroStrategy one will be expiring pretty soon, but you got till September and you also have till December, so we could still see these recover by then. Overall, we saw 20 out of 23 win rate, so 86.96% on that. And I will point out here too, if you see this W with the underline here, that means it was a miss in previous months and became a win this month. So the hit rate has gone up this month with these. On average, 114% on those. We do see some pretty big hitters here. EWI 373%, Amazon 209, Toast 125, Meta 113, XYZ. XYZ did pop after their earnings, by the way. XYZ saw 264%. All of these, if you notice they're in dark green, that means they showed over 100% returns. You know, the neon green is anything between 15 to 100%. So as you can see, we're seeing some pretty solid returns. Dick's Sporting Goods, Silver SLV, 232% in that situation. Now the important month I actually want to bring up is the month of April. We saw in April how there was actually quite a bit of fear due to the tariffs that were announced. As a result, you can see though, if you were able to buy that dip, I'm just going to point this out, 96% hit rate, on average 416% returns across 29 prints here. All right, 28 of them were wins. So only this one, Alibaba, ended up being a miss. It was actually, you know, 3 months out, and in terms of stacks, 3 months out is actually kind of a shorter term type of play for that. But look at this. We've got 1,000% for CLS, 1,150 for cores, 1,196% for a SPY print. We also saw 500%, 500%, 900%. There's a lot of big winners. If you were following stacks, what you would have noticed is 29 prints in the month of stacks, or in the month of April for stacks, is actually a pretty high number. So you can see they were heavily buying the dip and aiming for some pretty extended, you know, expected moves in that situation. So you can see in here, there are only 1, 2, 3, 4, 5 of them, 6 of them did not see higher highs right now in, you know, in the month of July. And so I'll keep that in mind. When Stacks says buy, that's what you definitely should do. What's up, Max? How you doing?
Now, by the way, so this is my second angle. We're actually live on Twitch as well. We're doing a 24-hour stream, so we're gonna do a little meme coin hunting, compliments of the FU Money Club meme coin chat to kick off the night later tonight. But yeah, so probably gonna do some racing later, do some more earnings reviews. I also put out a CPI scenario for everybody, so you can literally trade CPI with expectations. So awesome. Good day so far.
Awesome. Yeah, if you guys are available after this, you can always join Max over there. Max has his Substack. He's been doing a lot of earnings reports. He's got a YouTube as well, so those are all in the description box below. Make sure that you guys jump over there after we're done with this today. And he will be doing a 24-hour live stream, so he'll be on through market tomorrow as well. Let's finish up this Stacks AI, and then we'll get into our earnings reports for the week as well. The most important thing I want to point out is that if you see in blue on the right, these are all updates for this last month. So in the last, I would say 30 to 40 days, because I did do this backtesting a little bit late this month. I finished it up just today, so I consider the 8th to be, the updated month of last month. And what you can notice here is, again, a lot of dark green. A lot of dark green, meaning we're seeing over 100% on a lot of these positions when you consider it. So keep that in mind. 19 out of these 21 are winners. And actually, technically, you could call this 21 out of 21 if you're using 0% as your threshold. We like to make sure that our standards are a little bit higher for Stacks AI. We do believe that a lot of you guys have some higher expectations with these. So we've set our threshold at 15%. So, but again, Apple is up, and actually this MU position is up 16% from when they entered. So, if you don't have to play the options, remember, options are going to be a little bit more risky, a little bit more in terms of, you have to understand the knowledge and how it works with the time decay and things like that. But overall, if you take a look from those entries, the spot is their entry. to what the Google Finance is telling us their price is trading at for Friday, all of these are actually up. There's two of them, PDD and Intel, which are down a little bit. But even if you're just going with equity, you can get some pretty massive gains when it comes down to our STAX AI prints. Let's continue a little further back. Month of February, I will say I updated these numbers to reflect the 15% threshold that we have. So the hit rate is a little bit lower at 68%. But keep in mind, though, the average return for these is still at 146%. We do have these 200%, this 800% CAR, and up here Palantir up 800% as well. And even if you just, again, if you just went off with the spot change of what it was at to now, from February till now, Palantir is up 125%. CAR is up 80%. Palantir in this position is up 80%. So understand, when STAX is saying something is about to happen, or STAX is predicting a certain move in a certain direction, you know, I suggest you should listen. All right. Going back to the beginning of the year, over here we got 15 out of our 16. Oh, let me change that. It's actually 14 out of our 16 here. We do have one miss and one that is considered a wash. That Tesla only at 11%. But still, this one was a big month because of our Alibaba position. This is one of our biggest winners so far, 3,395%. We saw Baba go from $1.11 up to $38. So your $111 would have turned into $3,800 right there with Alibaba. All right. So keep that in mind. These, you know, we do this every single month. We update what the prints are. That way you guys can see, and you can see it's fully transparent. Every single month I've been doing this. You can go back into every single YouTube video that I've done and see the updated prints and see what's gone on with STAX AI. Just so you guys also see down here, overall hit rates. Okay, so I did update this with our 15% threshold. Our hit rate is at 84%. 84.48% in terms of the 407 total prints. If we go by just anything over 0% for our wins, this hit rate jumps to about 91 to 92%. On average, the highs hit 243%. As you guys can see, there's some big hitters like the Alibaba print, such as Palantir, things like that. It is not uncommon to see our prints go over 100% when it comes down to a STAX AI situation. So if you're interested in getting this type of data, interested in seeing what STAX AI and what we're doing in our community, don't hesitate. Go to investorcentralclub.com. Under memberships, you can sign up for our service. We do have a Discord channel. We also do have a STAX software that you guys can get. STAX software does include a few of the Discord channels as well. And you know, anytime something for STAX AI comes in, you can bet the entire chat is discussing it, trying to figure out whether or not they want to get in. I will also point out too, I understand 52% seems kind of low in terms of our hit rate for the month of July, but in my experience, in all my time doing these reviews and doing the STAX AI backtesting, this is just setting up for the upcoming months. You got to remember, a lot of these expiration dates are aiming for 2026. Some 2027, so there's quite a bit of time when it comes down to it, and I do expect that these people generally have some idea of some sort of insider information, or they've really done their research to be able to put their money where their mouth is. And down in due time, I do expect a lot more of these to hit, and a lot of the winners are ready to potentially go higher. So keep that in mind. All right, before we jump into our earnings reviews, I do want to point out that I did put together on our Beehive, which is in the description box below, I did put together a introduction to STAX AI software. It is a way for you to understand how you can install our app, a couple of things such as how to turn on push notifications, some basics, and some introductory videos we put together. We even have an interview with our CEO, Kimo, and all the back tests are all on a playlist for you guys to see as well. In addition, we have our emoji signals that are explained. This entire graphic that I put together for you guys helps you understand where the risk is, and what our signals actually mean on our STAX software that help you kind of gauge, you know, again, if big money, if they're spending millions and millions of dollars on positions like this, it generally means that they have some sort of insight as to what direction that possibly could go. And we also do have a couple of success stories and previous members that are sat down with me, did an interview, and discussed how they use STAX and how they use it to their advantage. So if you go under the Beehive, I do believe you can access these. You may have to give us your email, but the Beehive itself is a free service where you guys can get in and get additional information that we will be sending out on a weekly basis. Now, with that being said, I know a lot of you guys are here because of the upcoming earnings. Let me quickly show you guys what is expected to come for this month, or sorry, for this week. On Monday, after hours, we have Big Bear AI, we have OKLO. I did a write-up for ACHR Aviation. I do notice AMC and AST Space Mobile. We'll discuss those a little bit as well. Tuesday before open, we got Circle. After close, we got CoreWeave. On Wednesday, we have after hours, we have Cisco. Thursday, JD. Before open, WB, which is Weibo. And then after close, we got Applied Materials. Those are the ones I'm going to go over today. If there's any of them that you guys want to see and want to hear about, go ahead and type that into the chat box, or you guys can always email us or discuss it in the Discord. But those are the ones that I have prepared for today. And Max and I will discuss what research we've done and what the charts look like, along with what STAX is showing. So, with that being said, let's jump right into what we have to say. All right. First one is going to be the Big Bear AI, BBAI. Where is it? There we go. Okay. All right, BBAI, Big Bear earnings preview, Monday after close. The chart that we see shows that there's actually been some pretty heavy volume since 2025 started. We did see a push up higher. We've seen it come back to retest some of the previous supply and demand. The chart is up nearly 200% since our April tariff lows. It's been as high as 289% at the recent highs. So is this really just maybe an ugly Wyckoff accumulation chart? I know that AI, it's had its run up, but a lot of the money's flowing to the bigger names. NVIDIA and Palantir seem to be leading the way in that situation. But what does STAX have to say? Our STAX sentiment is overall very mostly bullish, but we do see some puts that have been coming in the last 2 weeks. If you're playing the short term and seeing what STAX says, 815, the 7 put and the 6 put are the ones that they're buying, but they are fairly small premiums. On close on Friday, there was $58,000 spent on the August 29th 8 calls. The insiders have been selling, but they are fairly small amounts. So again, we can see the insider trades on STAX AI there. EPS estimate is about a loss of 6 to 7 cents. Last quarter, they lost 10 cents. Revenue estimate is about $41 million, which is 3% up year to year. But they have a backlog of $385 million, which is up 30% year to year from recent DoD contract wins for their Orion platform. The government focus they have is expanding deployments at major airports and homeland security use cases. So their catalysts: strong defense and AI demand, backlog growth, and improving cash position, major contracts with DoD, new federal deployments, reduced debt, reaffirmed full-year revenue guidance of $160 to $180 million. But here are the risks. They're still unprofitable, and they still have very low gross margins. I will point out something I'm noticing with a lot of our earnings this year, or at least this quarter, is that a company might be beating earnings, but if they're still losing money, the market's going to react negatively to that. So keep that in mind. BBAI also has a history of post-earnings sell-offs, 14% median drop, 86% of the time. So, you know, if that's the case, unless they are able to show a profit of some sort, unless they really show increased revenue and better margins, I would say we're probably headed down in the bearish, headed down after this earnings, unless they do, you know, blow the earnings out of the water. The execution risk and scaling contracts into higher margin recurring revenue is another part of the risk that we have there. Max, do you have anything to say about Big Bear?
No, you covered it.
Cool. All right. So right now, I would say overall, would you be bearish too on this one?
Yeah. We are. If you guys have watched any of my videos, we're past the point of hopium. So unless you're a quantum company right now, the promise of like what could be is kind of gone. Now it is time for what is there. Because these companies have been getting money dumped into them, expecting results. So it's time to start producing results and stop reporting net losses. And that's where a lot of these companies are going to get caught up. And that's when we're going to start to see some purchases happen or some big partnerships where they take a majority stake and have some controlling ownership to a degree. So that's what you're going to be looking out for with AI. If you guys need a reference point, please go look at predictive analytics companies and what happened to them after about a 5-year span. Once people realized a lot of the technology was smoke and mirrors in a sense, but needed real structure behind it. Big Bear is in that case, but it is also being touted as another Palantir type stock where it is very undervalued. It's not profitable, but the upside with military and the fact that they have been able to implement their AI technology into airports already, considering those airports being LAX, Seattle, and a couple other major hubs. If they can honestly survive LAX, that tech, if that can help, then it can literally work in any airport in America. Let's be honest here. So I think there's a lot of upside, but is it going to show in this earnings report? I'm not sure, because this doesn't apply to the 12 to 18 month rule that I typically run with, because a 12 to 18 month rule only works when you're in the black or in the green. It doesn't work when you're in the red and you're like, well, we only lost 7 cents a share this quarter. Like, that's not great news. It is if you're Big Bear, but if you're a company that is looking for long-term sustained growth, where investors are going to dump billions into it blindly, Big Bear is just not there yet. So definitely, I would say long-term 2026 would be more of like where I'm going to be bearish.
Yeah, I agree. We do have the possibility, if it does blow earnings out the water, we could see it come up toward $8 or so. But I definitely think it's more so headed down towards 6. If it breaks down below 6, then we have a little more support at about 525. But in reality, again, like we said, it does actually remind me quite a bit of Palantir, where before Palantir was actually profitable. Before it was profitable, it was trading at these very low valuations. If it is able to show great growth for the future and start to head up, it has to start making money, and that's kind of the the issue that lies with this company name. Next, we got OKLO, OKLO. Monday after close, we are in an upward channel since early July. Will we see a bounce off that lower part of that trend line? The recent all-time high is at $85.35, which was just last week. And the daily stochastic on this name is actually showing overbought with bearish divergence starting to appear. So there is a possibility that we might see this name start to pull back. STAX sentiment in August is mixed, but short-term looks bearish after recent all-time highs. The flow does show recent puts taken out for August 15th, the 69 strike, and the 85 strike as they sold calls for the 85 strike. So 85 might be one of those, one of those walls in terms of those calls, aiming for below and keeping it below that value. We also saw, so for the 69 put, we saw $1.49 million spent. For the $70 put, we saw $511,000 spent. Like I said, the calls sold at 85. Over $2 million spent, says and shows that they don't really expect this higher than 85. The insider sells, the co-founders sold at the end of June in the $55 to $56 range, but they sold over $30 million of this name. So keep an eye on the Monday flow, especially if any more big money and unusual prints come in. Especially what we've noticed with earnings is if they are buying within that last 30 minutes to an hour right before close, those are, I would weigh them a little bit more heavily and consider that somebody's just trying to get in right before the bell rings. EPS estimate, loss of 11 cents versus 7 cents last quarter, so they're losing a little more. And last quarter, they beat their estimate of 8-cent loss with the 7-cent loss. So not, percentage-wise, it looks decent, but overall, they're still losing money. Bullish catalyst, build your own operate model with signed MOUs. Strong buy consensus at that $58 to $75 point price target range. And the Defense Department contract potential plus 14 GW pipeline. AI and nuclear crossover, data centers, clean energy. Sam Altman stepping down from the board also does mean that they may have smoother AI partnerships. Some risks and headwinds that there are. Pre-revenue, no operational SMRs yet, so like I said, they're not making money. Lofty valuation with hype priced in, nuclear regulatory hurdles, and a long timeline. In market context, year to date, they are up 74% on AI and clean energy tailwinds. Heavy momentum, but the execution risk remains. So OKLO, like I said, they are in this upward channel. Earnings, I think, is either going to keep it going up, headed back up toward that 85, or if it does break, which again, like I said, there is kind of that wall up there with those calls being sold over $2 million. I think there's actually a little bit of a greater chance of us possibly headed back down toward that $70 range in this case after earnings. You got anything, Max, for OKLO?
No, I'll be honest, I have not done a ton of earnings stuff yet.
Okay.
I'm working on it now, so
no problem. Yeah. No problem.
I'll have pretty much no input for anything Monday. I already did the two I care about for Monday, which was AMC and Big Bear. So those are done. Other than that, I was working on CPI for Tuesday, and then I was going to start working on my earnings reports that I'll probably get out tonight and Monday morning, realistically.
So for those of you that are not in our Discord or not in STAX, you guys can go underneath in the description box. Max's Substack is a great way to get a lot of this information as well. For example, AMC, they do have their Q2 earnings preview. He did just send that out while we were on live. But Max has a lot of great information, including things such as the CPI that's coming up this week. And additional, he's always out putting information for you guys, especially using what we have on our platform with STAX. He's using that to accompany the analysis that he's doing. So don't miss out on that. You guys have a way to not only get that for free right now, but also to get it as he's outputting that information.
Also, I started an insider sellers report series, and I'm relating it to earnings. So be on the lookout for that, because I basically I'll do it if it's a big day, I'll do it that day, but it's usually every other day. I put out an insider sellers report, and it's going to show you guys the biggest sells and buys that we find on STAX, and then it's going to give you context behind as well in terms of what the notes actually mean. Because the goal of the Substack at the end of the day is to take the bullshit language out of the making it confusing and just give you guys kind of the clear-cut, unbiased, just this is what this means in plain English, basically. So I'm always putting out stuff when it comes to STAX to help you guys use the service more efficiently and better. And if you ever have requests of stuff that you want to see or anything like that, you can always ping me as well. Because as Eric knows, if you ask me to do something, I won't really ask many questions. I'll just do it and then kind of go from there.
Yep. Max puts in the work, guys. And he's doing a lot for us over here at Investor Central Club. But yeah, definitely, if you want a little bit of insight in terms of the data, Max is your guy. Next earnings we have is Archer, ACHR, Archer Aviation earnings. Monday also after close. Yep. And so there are some signs of Wyckoff accumulation. It is consolidating in the upper range. This could be the last point of supply. If we continue to see signs of strength, we could definitely see this name move a bit higher. It's up 78% since the April tariff lows. The recent highs that you see are as much as 150% from the April lows. So keep that in mind. On the daily that I have shown here, the stochastic is fairly low, so there is a possibility for some more upside here. STAX flow shows mostly bullishness, but a few prints since the month started. We don't have too much going on in terms of what STAX is showing us. Not too many buyers in the dark pools. For January 2026, the 10 calls, there were $367,000 spent. And then there were also for the 22nd of this month of August, the 11.5 calls, $90,000 spent. The insiders, the high-ranking officers, are selling throughout the year between $7 and $13, but the most recent report was at the end of June where they sold 1.02 million. Like I've always said, keep an eye out for STAX flow on the Monday session, especially of anything right before the closing bell. Their earnings outlook, their EPS estimate is at a loss of 19 cents versus the 32 cents year over year. So it's an improved loss, but still a loss. So keep that in mind. Zacks ESP is up 2.7%, so a possible beat, and a rank of 3, which means hold, but sentiment leans cautiously bullish. Year-to-date performance up 169%, which is outpacing the industry by a wide margin. Strengths and catalysts, strong hype around eVTOL and urban air mobility sector growth. Positive ESP supports potential upside surprise, and investor buzz and government defense applications in play. The risks that we got to watch. Still pre-revenue, like I've said, no sales yet. Future potential is priced in. Execution risk remains high, and analyst ratings are mixed despite year-to-date gains. I will point out Ducky, who is also in our Discord, and also Invest IQ, has been an Archer since pretty low. I think before the $4 or $6, like end of last year, he was already in on this name. It's seen quite a bit of a run up. I don't think he's necessarily out of it yet, but it is something that he has he's had his insights, and he does believe it's headed up further in the long run. So keep an eye out for Archer. I will say there is still a risk to the downside if they do not, hit those estimates for earnings. But if they do have a surprise and are able to start showing an outlook for increased revenue and a positive EPS down the line, I definitely can see this name running up a bit higher. All right, some of the other names that you guys are here to listen about. I know CRCL had a very big pop earlier last month. Circle Internet Group, their earnings preview for Tuesday, before market open. The consolidation after the run-up at the end of June seems to be bouncing off the 145 support. So here you can see there's a lot of buying and selling at the end of June. We're right back down to those levels after a huge pop and a huge run-up, almost to 300. The ABC pullback pattern. So we've gone down A, B back up, C back down. Is that it? Do we see it set up for higher? In terms of Elliott wave, that is a possibility. We've seen a 1, 2, 3 push up. Now we can see the ABC pattern. We might see a run up of a new Elliott wave headed up further in due time. Is it just IPO and meme hype? We'll have calls aiming for above 180. So A lot of these aiming for September. We do still have a few August prints in here, but that one's a little bit less indicated, or a little bit harder to tell what direction they're going with. They bought and sold those pretty quickly. The big money puts for end of this upcoming week, August 15th, the 160 puts for 1.13 mil, and then there's big money calls that are aiming for 240 and spent 2 mil. Which side is right? Unusual calls came in July 18th, aiming for end of year. December 19th, 2025, 300 calls, $1.23 million, which is very unusual. So that insiders took advantage of the run-up. They sold millions in the last days of June and the last days of July. Expectations, EPS estimate, loss of 69 cents. Revenue estimate is at $647 million. Analyst ratings, there are 8 buys, 5 holds, 3 sells. And the median price target is 215, which is up about 25 or 29% from where we're sitting at about 153. Our bullish catalyst, regulatory tailwinds from Genius Act boosting stablecoin adoption, targeting $2 trillion stablecoin market cap by the end of 2026. Fintech infra play with 25 to 30% annual revenue growth, and viewed as a rare post-IPO buy in fintech. Now here are bearish risks. Mizuno rates it as a sell because of the heavy reliance on U.S. Treasury yields. That's 99% of the revenue. I will also point out, especially with CPI coming in and the potential of rate cuts, there are additional risks that are on the table because of it. Distribution costs jump from 39% to 62%. So there's a much higher threshold in terms of what their costs are there. And the massive IPO run up from $31 to almost $300 means that this valuation is fairly stretched out. Stop me at any time if you have anything to say about these ones, by the way, Max.
Yeah, no, I mean, Circle is, I don't know. I don't like some of these names just because until we can see Flow Monday, I feel like it's really hard to judge because these aren't things hedge funds are going to necessarily jump into to show like long-term conviction, right?
Yeah.
So you're almost playing it like every 2 weeks, every week, whatever. I don't know, because my buddy Los plays Circle a lot. And he'll call me one day like pissed off because he's down 50%. And then the next day he's like, holy shit, I'm up 400% from the down 50% I was because I just decided to hold because I figured I'm just going to lose the money anyways. And I'm like, dude, why do you keep trading? Why do you do this to yourself? Like, go trade SPY 0 days or something. Like, it's that's what it's giving me, and I know it's had a great run up, and I don't think it's a meme stock, right? I just think it's heavily manipulated by retail.
Okay. I look at it almost as if it's just the hot roulette or hot craps table at the casino. Everybody's huddled around it watching it, but it's just there's a lot
fewer
of hype
playing. Like fewer actually playing it versus the people who are kind of hyping up the people who were playing it in a sense.
So I mean, Circle, same with Figma as well. I feel like there's just a lot of these new IPO names that are, I mean, overall they can be and they are good companies for the long run. But you're just seeing the new hype of, it's the new shiny thing on the block right now, and everybody's gravitating toward it at this point. But like I said, EPS estimate is a negative 69 cents. So this company still has a lot to prove at the end of the day.
And I think that's the big thing is it's just so hard to get out of that, like, okay, this all sounds great. Now show us what you got. Like where's the money? It's like You can keep just using buzzwords until you're blue in the face, but at a certain point, like if I tell you I love you every 5 minutes, at a certain point you're gonna be like, that's great, but like that's kind of lost all meaning. Like you gotta do something about it, you know?
Yeah.
And I think a lot of these companies are gonna start to face that, especially with how fast technology is moving nowadays. I mean, you saw it with Figma, had an amazing run up and then an incredible sell off.
Yep. Exactly.
And that's how it works. And these companies are literally being like compared to Solana meme coins at this point, because it's like get in for $20 and make 1,000% like in 2 days,
Yep.
and it's just like oh, okay, or make 150 300% on your like investment. So it's just, and it's gonna, you know what the sad part is? They're not gonna fail. Like, because you're gonna have so much retail hype behind it that it's gonna pop.
Mm-hmm.
It's just a matter, are you gonna get hold, are you gonna be the one standing there paying the bill
Yeah.
at the
Yeah.
end of dinner, or are you
Somebody's
gonna,
gonna have to bag hold at the end of it all. So,
exactly,
and
and
it's
are you
hard to
gonna be the
tell when
bag holder?
it's hard to tell when that's gonna happen. But sooner or later, somebody's gonna get rug pulled on this kind of name.
Hmm. So that's why it's really hard to write earnings reports for those kind of companies too, to be honest.
Yeah.
Especially when it comes, because it just makes me sound bearish. Like no matter how I try to phrase it, it just sounds bearish because it's like, okay, they're gonna report a loss again. That's almost $1. So that means they could, because by the way, Circle is a company that could come in and go, oh yeah, our EPS is 129, like negative 129. And it would not shock me by any sense. Because if they go in and go, oh yeah, well we raised our R&D budget and we raised all these budgetary things that we need to make this technology move forward, that will absolutely destroy EPS. That will absolutely destroy revenue. And then it's going to come down to if they even have a backlog and what percentage of that backlog is actually ready to buy. Because if you notice, the companies that are reporting a negative EPS, guess what the number one thing they all have is? A backlog of customers, upwards of 100+ million in revenue waiting to be executed on.
Cool. Yeah. Definitely starting to notice that trend, especially this earnings cycle. Right. A lot of companies that, you know, they're still losing money. At the end of the day, they're not going to survive if that's going to be the outlook for the future for them. So,
By the way,
Mhm.
Big Bear has a $385 million backlog right now.
Yeah.
I'm not even joking. Like and that's why like it's easy to be bullish on them, because it's like they literally have almost $500 million just sitting waiting for execution on from all of these government contracts that they can easily get. And by the way, their government contract right now is 3.5 years to start.
Okay. Yeah. So they've got
So
time.
just as a heads up.
Okay.
So just a couple things to consider when you do play these names like Circle, Big Bear. Anything, would you say, Eric, a fair price is like anything under like $20 a share?
Yeah. I mean, I wouldn't necessarily even say just it has more to do with probably their market cap too. A lot of these companies, especially number one, they're new IPO names within the last year to two. Number
Yeah.
two, they are losing money overall. Like you said, number three, they've got a huge backlog of future projects and future money to be made. But as of right now, especially just with the way that the market's reacting, is if you come in line or come in lower than expectations of EPS, we usually have been seeing probably a sell-off and then possibly it getting scooped up at those lower valuations. So just keep that in mind. Next one here is another name that we've seen a lot of is CoreWeave, CRWV. The earnings after close on the 12th, so Tuesday. Let me double check, is that right? Yeah,
I'll have
Tuesday
a nice one
after
out
close.
for them.
Yep. Breaking out of a downtrend since June. Okay, so they are starting to break out. That's something nice to see. This is our 4-hour chart of CoreWeave. Up 280% from April tariff lows and as high as 450% from the lows to the recent highs. STAX flow is strong the week leading up to earnings. We see the August 15th calls aiming for above 140, and we see the puts aiming for below 125 and 95. Okay, and big money from July are all happen to be puts though, so keep that in mind. So we see a lot of short-term stuff coming in right now. Insider sells from back in March are pretty much now irrelevant, simply because they got out at some pretty much lower valuations. They got out pretty early, and you have to consider the fact that right now it's trading at multiples of what they sold at. Bullish catalyst, Q1 revenue surged 420% year to year to 981.6 million, so almost a bill, driven by AI demand and partnerships with OpenAI and Microsoft. Building a $6 billion AI data center in Pennsylvania, 300 MW capacity, scaling to gigawatt scale. $9 billion core scientific acquisition could save $10 billion in lease costs and boost margins. And Citi upgraded them to a buy with a $160 price target on AI growth potential and cloud demand. And it is trading at about 130 right now. The bearish risks: high debt load of $8 billion with Q1 net loss of 315 mil. Heavy Microsoft dependency, 60 to 72% of revenue. Some core scientific shareholders opposing acquisition terms, and valuation concerns are aggressive growth expectations may already be priced in, increasing volatility risk. Their expectations for EPS are a loss of 23 cents, with their revenue at right over $1 billion. So like I've always said, STAX flow watch the STAX options flow for any large premium unusual prints that come in right before earnings. We often see them take informative positions within 30 minutes to an hour before the closing bell. But I would even say not just the 30 minutes to an hour, anything that comes in the day right before they report is something to consider. So like I said, if we filter for just the buys, we do see a lot of, it's kind of mixed. Our call to put ratio is pretty much even at this point. So keep that in mind. Anything on CoreWeave?
No, I think you nailed this, honestly. I like kind of the bearish risks aspect because I think, again, but I want to say one thing about the Microsoft dependency. It's not always a bad thing because, like, OpenAI, for example, had a Microsoft dependency very early on, right? And it was to the point where it was like, is Microsoft just OpenAI's glorified IT support team? Like, that was how they kind of scheduled it. But, like, okay, I'll give you an example, like VMware, right? VMware, guess who their main customer was? It was Dell and IBM and EMC. It was like 3 companies were the only companies that really bought what they did, right? But what ended up happening, VMware gets bought by Dell. Dell acquires them for like a couple billion, by the way, because they do one thing really well. So CoreWeave kind of fits into that model where it's like they do this one thing super well. And I think like they could definitely be a long-term like player in the space. But again, they're kind of like Circle. They're basically like Circle, but with a better book of business in my eyes. Like they're a little more proven out. They have a little more like institutional conviction, I would say, because when you have the other thing to note is when you have banks come out and go, hey, this is like where we value this company, it's going to do a lot in terms of how the market's going to view them. Because if you notice, anytime Tesla or Meta or any of these companies get an upgrade, what happens overnight? We see a gap up, right? We might see a sell-off, but we're going to see that initial gap up where you can make easy profits on a swing or something like that. CoreWeave is very much that type of company. It's not a company you're going to necessarily day trade. It's a company you're going to start a position in, you're going to average down at some point, and then you're going to play out your swing over a day, 2 days, a week, whatever your time frame might be. I don't know. I might be off on that, but like just from what I've read on your analysis and stuff like that, I would definitely say this seems like much more of a swing type of play, or it could be like a play the sell off after the beat or something like that, if that makes sense.
Yeah. Yeah. We'll see.
Because
I mean,
I don't see it dipping down. That's the thing.
Okay. Yeah. I
Like in
mean,
terms of like, oh, like I see it as like an app, right? Like app sold off, but then
got
there
bought up
were
completely.
and then there were contracts that you could have bought for like 0.10, like $10 a contract. $100 would have turned into 10 grand in a day because I think those contracts 995 a contract, so almost a 10,000%
Yeah.
banger. Like, so it's just CoreWeave is very much that type of company where like if it does sell off, I promise you that stuff you will see dark pool prints, you will see insane options prints, golden sweeps and unusual buys over $1 million, buying up all that equity. And I would honestly look at those as the whale targets in a sense too.
All right. Yeah, we'll see how that plays out this week. Definitely a name to watch, and especially like I said, keep an eye out for what STAX has to say right before they do report. A little side note, that I want to point out was that on Friday, we did actually see this flow come in. So first off, our flow scanner picked up this for ETHA, which is the Ethereum ITF. We saw $4.49 million of calls being purchased with 0 puts being taken out as well. And so if you take a look at it, this is what I like to see. When I take a position, I love it when I click on buys and it filters out and it shows just them buying these calls. No puts at all coming in. And even so as well, we see the unusual and we see the big money being taken in this position as well. And so what happened right afterwards? Well, Ethereum over the weekend, we saw Ethereum pop as high as 4,300 so far. We'll see what this opens up at in the morning on Monday, but I will just say that with these new all-time highs that we're seeing for Ethereum, the insiders definitely knew going into it right before market close on Friday. So that's one of the ways that we love to use STAX, especially when we have that type of analysis. We see a breakout coming, we see new highs or them testing all-time highs type of situation. It is always nice to see that, and especially, like you can see right now, it is playing out exactly to what STAX was saying. Next, what we've got 2 more that I've written up for you guys. We've got Cisco and we've got Applied Materials. Cisco Systems, Wednesday after market close, that is breaking out of a huge weekly channel and up 37% since the April tariff lows. This name always beats on earnings, so expect that sentiment to be already priced in. So I will show you, we've got this huge channel that we're headed up on, and we're just starting to break up out of it above that. Previous all-time highs for this is around 81. We're at 71 right now. STAX flow last week, we saw the 70 calls for 815. Saw over $500,000 being spent in premiums. Puts from the end of July, aiming for December 19th, 2025, 65 put. So they spent $780,000 on that one. EPS revenue estimates, EPS is at 97 cents, up 11 to 12% year over year. The revenue estimate is at $14.6 billion, which is up 7% year to year. Previous earnings reaction, Q3 EPS beat 96 cents, beat the estimate of 92 cents, and the revenue was up 11%, up to 14.15 billion. So the stock popped 2% after hour on strong results and guidance. Bullish catalyst, demand for AI and security products gaining momentum. 4 straight EPS and revenue beats, so a 4% average surprise. Marikai, FedRAMP, Duo IAM, Zero Trust driving growth, and broke out above the 69 and 78 cent buy zone and trading near $73. Bearish risks. gross margin pressure from tariffs and costs. Public sector macro weakness could hit demand, and high expectations have a risk of sharp downside if the guidance does miss. So like you see, the buys for Cisco, the most recent ones all happen to be buys. We do see quite a bit of purchasing last month. You know, millions and millions, over $1 billion spent when you take a look at the big money and the dark pool prints that are showing here. Overall, on the big picture, Cisco is a great company that definitely could be headed up further and higher up in due time. But in terms of certain technical indicators, it has run up quite a bit. Could use a little bit of a pullback, but I would expect it to head up further in due time. You got anything to say about this one, Max?
No, it's outperforming most of the Dow. It's for the most part, and it's a steady performer. So it's definitely, if it's something that does sell off, if they miss, don't expect it not to recover over time.
Yeah.
It's a steady climber. It's not sexy. It's not fun. It's something you buy, and then you go look at it in 3 years. Because like, if you look at it every month, you're just gonna drive yourself crazy because it doesn't move much. If we're being honest.
Yeah. It's a slow grind up on this one for sure. Like, keep in mind, this chart I had for you guys goes all the way back, right? We saw the huge run up. This is the 2000, tech bubble, and it's come back down. It's had its accumulation and continued up, but this is a very slow grind up. But again, you got in on this at $10. It's now at 70. It is a 7x from back in 2002 or so. So again, since 2020, even when we saw the big drop, went down to about 35 or so. It has doubled since then. But again, compared to some of the other names, the other big tech names, this is definitely one of the slower movers.
Yeah, it's an IBM with a lower price target, basically, and it's more in security and communications than it is AI and cloud at this point. So It's, I don't know. I like it. I love companies like that because it's kind of like a risk-free because it's a risk-free investment in a sense if you're willing to sit in it for 5 years.
Yeah.
If you're willing to sit in it for 5 years, you're not going to be mad at yourself. You'll just be mad that you didn't buy more on dips or when you could like afford to average down or put a little more money in, at a price point where you're comfortable.
Yep.
And that's where having a money guy is really helpful because then you can go, hey, what's your price target on the low for this so I can put another $2 to $3 grand or whatever your budget is, right? I do that with my parents guy. I'll be like, hey, I'm in this and I want to buy some more at some point. What are your targets on the downside? And they give me some cool targets and it's worked out most times, to be honest.
Yep. All right, next one I got for you guys is AMAT, Applied Materials. Thursday after market close, they are up 48% from the April tariff lows. They're making higher lows, but have broke down from the upward trend line that was from earlier this year. STAX shows a lot of unusual puts being purchased, aiming for 2026. And the most recent print is a $708,000 spent on the 230 calls for January of 2026. Two of our favorite traders, politicians, Marjorie Taylor Greene and Mark Wayne Mullen, spent quite a bit of money on bought in May and in June of this year. And the EPS estimates are $2.39. $2.36, which is up 10% year to year. And revenue estimate is $7.2 billion, which is up almost 7% year to year. Previous earnings, they saw a beat of 8 cents, $2.39 versus a $2.31. A slight revenue miss at $7.1 billion, but the stock did drop 5.6% after hours despite that beat with the revenue shortfall. Bullish catalysts, AI demand boosting semiconductor system growth and margins. Gross margin 49.2%, which is the highest since 2000. Strong liquidity, 6.2 billion in cash, ROE at 35%, full year guide revenue at 7.2 billion, EPS at 2.35, which is up 11% year over year. So bearish risks, sensitivity to revenue misses. So last quarter showed that even a beat can't save that miss. Trade restriction risks in China and macro slowdowns. Forward PE at about 19.5x, PEG at 2.8, which is a decently high valuation with limited room for error. Applied Materials, I was in this earlier in the year and made a decent pop off of it. I will say that this little breakdown from the upward trend here is a little bit concerning. We could see it come down a little, but it's still technically making a higher low on this situation. So is this going to turn into a bear flag or bull flag situation headed up further, or are we going to see the A, B, C pattern and see this break down a little bit more? If it breaks down below 175, we could very quickly see 167 and 157 if it does head back down. But overall, it's been doing pretty well in its previous earnings reports. But like we've always said, just because it's a beat does not necessarily mean it's going to head up higher. Anything on Applied Materials?
No, I was going to say one thing I noticed about before I became a part of Investor Central Club was you guys were in Applied Materials early. I don't know if it was just you, but I did see some posts about it early on, and I always would see it come up in the flow randomly. So it's definitely one of those ones where you may not know much about what they do, but you do know people are not willing to lose money on it, and that might just be enough conviction to get into it, you know? But yeah, in terms of them, they're hot in their sector, looking good. So we'll see.
Yeah.
Again, I think we're starting to get to the bounce back companies there.
Yeah.
Like the ones that they might miss everything and have a horrible outlook, but institutions are still bullish because they know something.
Yeah. I do remember something about Applied Materials where because some of these politicians that have been buying are actually on the board that could be potentially passing some new laws that will benefit this company. So, I do think down the line we might see a pop in Applied Materials after some additional bills maybe get passed. So, something for the future. Definitely a good name for a long-term type of position. Earnings, like we've said, can go either way, but I will say that in terms of the long-term outlook of this company, I would be bullish. I do have two last ones, actually. I wrote these up earlier today. Two Chinese companies. We've got JD and we have WB, so JD.com and Weibo. I will point out that China names, a lot of them have been consolidating in a upward range of an accumulation type of chart. So I do kind of expect that China will probably stimulate their economy with a little bit more money printing soon. And that may be the catalyst that pushes some of these names a little bit higher. JD.com earnings preview for Thursday before market open. Needs to break out of a smaller downward trend to begin this upward movement. The name has actually been flat since the April tariffs. Will it start to break out? Keep in mind, this is a Chinese company. So obviously the effects of the tariffs are a little bit different. Earnings are all beats since 2018, so expect part of that to be priced in. And the STAX flow shows unusual calls taken for January of 2027. The 42 calls, they spent $402,000. If you filter for buys, the flow is dominated with calls for September 19th, but they are fairly small premiums. Let me pull that up here. So if I filter for just the buys, you'll see it's actually more so bullish than bearish. And we see a lot of these 919 positions for above 40, above 30, right, above 40, above 39, above 40. So a lot of money in that position. No insider trades to report. EPS and revenue. EPS is 51 cents, 48 for GAAP, which is actually a 60% year-over-year drop. Revenue is estimated to be 46.7 billion. Previous earnings. I double check this. EPS is actually, they had a very large beat. Revenue with 291.4 billion beat the 291 estimate, so 0.4 bill. Forward PE at 8x. So this is actually a very low PE ratio. I would definitely say, you know, it's a pretty decent sized company. 8x PE ratio is kind of a signal that if you believe in this company, it's time to get in. Strongest execution on growth, margins, and shareholder returns. JP Morgan, positive catalyst watch price target of $50, stating trade-in programs and margin strength. So it's trading at 31 right now. Bearish risks, that EPS expected to plunge 60% year over year. That's a big concern. Rising fulfillment and marketing costs are up 17% year over year, hitting their margins. And the macro slowdown in China with heavy competition from Alibaba, PTT, PDD, and Meituan. Okay, so there is definitely this accumulation type of pattern happening. It's starting to, you know, it doesn't quite drop back down to these lower ends as quickly. We could definitely see this, if it is able to break above this downward trend, we definitely could see it head back up toward 37 and eventually 41. The lower end where we see more additional support would be right around that 28 to $30 range. There is a little bit of a gap below. And support back down at 24, but those would, I don't believe it necessarily will head all the way back down there. Last one I got here is Weibo, WB. Also Thursday, this one before market open, full market cycle chart. So you guys, if you guys have been watching my reports, have been in my Discord channel, you'll see these are the upward, you know, we see this blow off top, and then it comes back down toward depression and despair levels. This company was trading up at $140 back in 2018, and it's come all the way back down to about $10. So over 90% drop. But it is called the market psychology cycle. If you take and you study the market and study these charts, you'll see this on just about every single name out there. Volume spikes every time this name drops to $7. Are they accumulating? It has an 8% dividend with a PE ratio at 7.19, which is extremely undervalued. There's a very limited STAX flow to analyze. We just see some puts being purchased here back in April. So that's too far back for us to make any calculated earnings estimates or earnings predictions off of. They also have no politician or insider trades. EPS estimate 42 cents versus the 45 cents last quarter. They did beat by 7 cents. A revenue estimate $439.7 million, which is flat year over year. Like I said, previous earnings reaction beat by 7 cents, revenue beat by $3 million. Bullish catalyst, attractive valuation, PE at 7.2, which is, you know, pretty attractive. MAUs 591 mil, DAUs 261 million. AI content driving engagement growth. Operating margin improvement 33% versus prior quarters. Bearish risks, sluggish revenue growth, earnings down 3% annually, ad spend pressure from China macro conditions, and fierce competition from other social video platforms. This is definitely a name that could definitely see a pop. I do believe they'll probably see more upward movement when it comes down to the bigger picture of what China is going to do. There is an expectation that in due time, China very likely will start to print money. When that money flows into the system, you'll see it start to inflate some of these names. But until that happens, I mean, earnings reactions, again, could go in either direction. But this name has been beat down so heavily. If you're a believer in this name, I definitely think there's more upside than downside at these values. All right. That's all I've got for you guys today. I know if you guys are in our Discord, if you guys want to jump on Max's live stream later today as well, he's got a lot of other information for you guys to check out. We do have CPI coming in
Do you want me
on
to
Tuesday.
do CPI?
Yeah, give me your spiel on CPI so that we can get them ready for it.
Okay, cool. So basically, I put out a quick 4-minute video on, it's on X. It's in, if you're a part of Investor Central Club, it's there. It's on my YouTube. But I also, if you're on my Substack, I wrote kind of like a little splurb about it to kind of break it down a little and make it a little more digestible if you don't like to hear my annoying voice. Oh, hello. And that's the voice I'm talking about. By the way, Eric, did you notice the new editing in the videos?
I saw you're
How
putting the numbers up on the side and all that. So I mean,
how are we feeling about the new edit style?
I like it. It looks
right?
good. Yeah, it looks
Instead
good.
of just the screen share, now it's like full into, yeah. So videos that's why, for the record, that's why the articles have been slow, everybody. I'm actually putting a little more effort into the videos and production quality. So my apologies.
No, it's
But
evolution.
basically,
I like it.
Exactly. So headline CPI, we're expecting 2.7% unchanged from June. But some people are saying also 2.8%. So I put the median between 2.7 and 2.8%. Core CPI, so think if you never heated your house, owned a car, or bought groceries to eat, we're looking at 2.8%. And then monthly, we're looking at 0.2%, which is more of a momentum number than anything. Now, the key drivers are in June, shelter inflation is at 3.8% year over year. So yes, your landlord is currently looking you in the eyes and shaking your hand while also stabbing you in the back at the same time. So just keep in mind about that. They're still making their money, and they're making it quite nice with a 3% return year over year, which is, quite frankly, on real estate, quite a nice return. Medical care, car insurance, and household goods are also still hot. So basically, if you have a pulse and insurance and own a motor vehicle, you're getting taxed for that. So congratulations for being alive. And energy prices just aren't moving much. So this is what could happen. To make it simple, a cool print, which means headline CPI comes in at 2.6% or lower. Think rally mode, like you're going to see growth stocks explode. We're going to see the S&P 500 spike. We're going to see Fed rate cut odds rise for September. They're already at 95% right now. They'll pretty much be baked in at that point if we get a cool print here. Now, if we come in at 2.7, 2.8%, by the way, Trump will take 100% credit for that. So just as a heads up, he will be like, I did this. Look we did tariffs. It worked. I told you all. Which, for the record, I will tell you right now, there's like a 99.9% chance we don't come in cool. The two most likely scenarios will be in line, which means we come in at 2.7 to 2.8% for headlining, and then we come in at 0.2%. It's just going to be a choppy ass day. If we come in line, don't take 0 days, find some swings, find some stuff you believe in, wait for Trump to tweet or to threaten to fire someone like Lip Bhutan from Intel. For the record, that was insane. Can we just like agree on that? Like, this man literally turned Intel around and got them out of a $7 billion operating chip loss, and then Trump goes, I don't think he's the guy for the job. He's clearly not aligned with American values. He needs to step down immediately. What? They're the only chip company in America, buddy.
Yep.
Anyways, Fed's going to stay cautious, by the way. They will hold their stance of wait and see for more data. Mm-hmm. And pretty much we're just going to see a chop market. Growth stocks are going to chop as well. That's why we're going to see the big boys chop as well. Now, a hot print, 2.9% or higher, or even like 2.85%, I would say. Sell off for days. Sell off. Like, it's as simple as that. Just buy puts and come back at 130. That would pretty much be the game plan for that day. Yields are going to rise on that. The Fed's going to stay hawkish longer, and the dollar's also going to rise as well. So those are pretty much what we're looking at in terms of the scenarios for CPI here. I'm expecting it to either come in line, but I also wouldn't be shocked if it came in hot with Trump's random doomsday tweet, basically, of like, here's like 200 new tariffs for everybody. So I would just, stay on your toes, be willing to play with the chart. Don't play bias. That's what my best advice is like when it comes to weeks where we have CPI and everything like that, like don't play the bias, play the chart.
I would even
Like
say
whatever.
I would even say it's probably a good week to try to play volatility instead. Look at the VIX, see
Oh
if you
yeah.
can see again. There's expected volatility to come in this type of situation. I did want to actually bring up something with. So first off, there's been a lot of talk about how President Trump wants us to, or he wants, Jerome Powell to lower interest rates. And then what did also happen, most recently was we had the revised job reports that also, Trump now has fired the Bureau of Labor Statistics head, and for basically lying to us in terms of it. Now there is a bit of bearishness when it comes down to, okay, number one, the Fed's job or their goal is to maintain maximum employment and to keep inflation low or at their targets. In this situation, all of a sudden, employment is no longer maximized because we just had that revision on our jobs report, which does actually mean that there is a bigger likelihood. We just saw the possibility of a September rate cut jump to about 95%. It was at like 40 something percent just before that. So there is actually a big possibility we will start to see lower rates. But in doing so, we also saw the market sell off in a little bit of a reaction to it. So I think it's important for people to understand, the balance between, number one, if inflation does come up and come in hotter, it does technically mean that the Fed should not be lowering their interest rates, that they will actually have to raise interest rates possibly or keep it higher for longer to maintain that. Okay? But another side of it is also that the reason for why they are raising or lowering interest rates is always important, the narrative behind it. And as of right now, the narrative behind it is that the jobs market is doing poorly. So there is the possibility that we may have to drop those interest rates, but for the wrong reasons. So even though, yeah, lower interest rates sound great, it's supposed to stimulate the economy, but we have to stimulate the economy because we gotta rescue the job market from these issues that we're seeing. So, just like Max has said, Tuesday, I would just say I'm expecting volatility. I don't know what direction it's going to go in. Are the tariffs and everything fully priced in? Have we seen the height of this inflation and the risks of the inflation? Or are we going to see it come in a little bit lower? Another part that I want to point out is every time they come out with these inflation numbers, they're basically playing with the numbers too. They keep certain numbers out of it. And they weigh certain things. For example, shelter inflation here, medical care, insurance, household goods. There are certain things, and another thing is they often find the right numbers to kind of push a narrative that they're looking for. So ultimately, if you are in charge of this and what do you want to see, if you do want to see the interest rates go down, then yeah, we're probably gonna end up with a situation where they do have these cooler prints and they show that, hey, we've beat inflation, we can start lowering interest rates, kind of thing. But yeah, CPI is definitely going to be a situation with a lot more volatility, especially because you will see a little bit of fear come into the markets right beforehand too.
I mean, I agree. I think the big thing people need to remember is last time we made an aggressive rate cut to save the labor market, 75% of the Federal Reserve came out and had regrets of that cut.
Yeah.
And The problem that people don't understand is when rate cuts happen, it's not a good thing for the market.
Yeah.
Like, it's not this thing where we're going to rally and SPY's going to hit 700. If we cut rates way too aggressively, SPY will be a lot closer to hitting 500 than it will 700. I promise you that much.
Yeah.
Because at the end of the day, a rate cut is saying like, okay, to give you guys an example, and like, because Eric says like they're playing with the numbers, and to give you context, so 2 years ago, what was our last debt ceiling meeting? 2 years ago or a year ago, Eric? Do you remember?
I don't know off the top of my head.
So I think it was 2 years ago, and it was about in June, and it was a time where they basically were like, "Hey, so it's the debt." By the way, the debt meeting for America is basically the time where we come together and go, "It's time for us to pay the bill for these GDPs, for all of these various things that we essentially middleman for other countries because." We support our US dollar supports over like 13 different countries like GDPs. And like just like if the dollar fails, like those countries would fail, basically. So just keep that in mind. So we have to pay this bill every X amount of time. I can't remember off the top of my head, but last time we've been in this debt ceiling, and this is why we've had 20-year rates. So we've had this debt ceiling that we can't break, where it's basically saying like, hey, we need to pay this bill for like all of this money that we've essentially been providing people. And if we raise that bill too much, then it will essentially crash our economy, because what ends up happening is there's like a glass ceiling to what we have, right? Now, if we keep putting money up and that glass ceiling can't rise anymore, then it eventually comes crashing down, and then you have a 2008 housing crisis. And there's always a catalyst, whether it's housing, personal credit, whatever the case of what the economy is spending the most money on, that will be the catalyst that can also crash the economy, because whatever the economy is spending the most amount of money on, hedge funds, the big boys, they're putting their dollars into it as well. So keep that in mind. So the big thing here is understanding like CPI and all these prints are going to be important, because if Trump brings someone in who's happy-go-lucky with cutting rates and they cut too much too fast, it will literally stall growth within America. And then we will end up in a 2008 situation all over again. So like, I understand like the rate cut hype is super cool, but like when you're looking at STAX and you see all these SPY puts coming in while SPY is ripping, but you see them coming in for September 19th, for October 17th, for November 21st, because those are honestly the most popular expiration dates right now, then don't be shocked when those 540 puts, those 560 puts might go into the money. As crazy as that sounds with how SPY is right now, like if they cut too much too fast and Powell gets pressured into cutting too much too fast and none of the board is behind it, then Trump needs to get a lot more people on the board who will be behind those actions to keep that market momentum going. Because I'm telling you right now, when we cut too early last year in July, everybody came out around this time and was like, we shouldn't have cut 50 points. We showed too much of our hand too early.
Yeah. Yep. Did a little, I mean, it caused a lot of additional inflation that now we're paying for again at the end of the day. So, we'll see what ends up happening. I think CPI, at the end of the day, I always like to think, what do they want to happen? Definitely a little bit more inline or cooler if possible. But if we do see a hotter print, I definitely think, like Max said, we definitely will see a bit more of a sell-off. And that could be why we see so much of that hedging for the next 2-3 months in terms of SPY and those ETFs. We definitely saw a lot of big money positioning themselves for that, especially as we hit these all-time highs. All right. That's all I had. I definitely on here a little longer than I expected, but we covered everything. We covered STAX AI today. We covered a lot of earnings reports. During the week, if we have additional stuff to share, we will jump back onto live and help you guys out with that. Probably watch a few of these as as market closes as well. That's all I've got for today. Keep an eye out for anything else that comes up, especially these names that we just reviewed. Make sure you check out what STAX has to say. Have those conversations in the Discord with us so that we can keep an eye out for anything that comes in last minute. But I think we did a pretty thorough overview for today. We will get back to it very soon. I hope you guys have a great rest of your weekend, last few hours of the weekend, and we'll see you guys in STAX on Monday. All right, thank you again, Max.
Yeah, no problem.
See you guys all. Have a great one.